Hello, hello, hello. What's going on, everybody? Welcome now, Stock Trades. How's everybody doing today? Okay. Let's see where we're at right now. All right. So, B-Rad Cooley, what's going on? Sparta, yes, South Stock Trades members assemble. I love it. I need more bottoms in order to get to the top. That's so true, right? 48 hours before lifetime membership goes up to 35%. Yes, that's true. Yes, that is true. In fact, let's just get it out of the way. So, ladies and gentlemen, for folks that are interested, you have 2 more days to use the flash coupon code. Okay, listen. This has been on purposely for a while, okay? It's because we're about to do another price increase, right? So you got about 48 hours to use flash to get $500 off, because within 48 hours, we are going to be increasing the mastering to $3,997 and the bundle to $4,047, right? And obviously, you can use Affirm and all these other things that we offer to help ease the blow of lifetime access. On average, let's say if you were to calculate it for a year, it is technically lifetime, but let's say 4,000 divided by 365, that's about pretty much $11 a day. $11 a day to get access to the most powerful stock terminal. But technically, it's not for just a year. If you, let's say, live for 10 years, I hope you live longer. That's about 120 days, right? No, I can't do math. If you live for 10 years, you take lifetime, let's say, and divide it over by this, you're paying just $1.09. So you could see ultimately, you could see whether this is valuable or not. But we are going to be increasing prices in 48 hours, and we're going to be removing the flash sale. So take advantage, okay? So, all right. Let's go ahead and just go to the comments real quick. What's going on, everybody? You sold today, going to think about it. What's cooking? We got a lot of stuff that's cooking, okay? All right. So check this out. So the problem with making all these lives is I give little pieces of information in every live, and I expect you to, ultimately put the pieces together, right? Now, unfortunately, I know, sometimes that might not be the case. You might forget, and ultimately, let's take a look here. Oh, we just had someone. I have my phone on loud. We just got 3 people just purchased. Holy crap. Okay. Well, congratulations to the people that are purchasing right now. Okay. I have to keep my phone open because I have a meeting that can happen at any time point. But I don't think it's going to happen in the next 30 minutes. But I have the phone open here. So, normally when I make a video, I expect you guys to kind of watch it and just kind of put the pieces together. But sometimes it's hard because there's a lot, right? There's a lot. I'm not like your other YouTube channels. Everything I say is backed by data. I'm not trying to make it look sexy or look beautiful. I'm trying to give you the facts, right? And I feel like now you guys know that this channel does not and will not bullshit you. Okay, so with that, let's kind of walk through the facts and kind of bring us up to speed, right? And conglomerate what we've been talking about for the past 24 days, right? Okay, so let's open this up. So today, Clover is up 2.42%. The VIX, which is the volatility index, which measures fear, is down 9.34% in one day. Okay, yeah. The S&P 500 is up 1.76%, but it's funny how Clover is outperforming the upturns and downturns, but still is higher than the S&P year to date by a lot, right? Okay. Now, if you don't recall, back on March 4th, I said there's going to be a bounce right on that RSI, and it supports the buy zone we created. Okay. I went ahead and created this buy zone in regards to when Clover was falling. I'm like, you know what? I think I did it right up here. I'm like, this is a good buy zone. So if you were to go to the buy zone, you could see that it did a really good job. And you could go and take a look at the week here. You could see it fell right on that buy zone, and it's been oscillating kind of back up to support. So you can ultimately see with the support, and again, I drew this, our stock trades, right? We're starting to get a MACD cross, right? And you could see this respectful buy zone from like, whatever it was, like 345 or whatever, 340. It kind of colored in all of this green here, right? And this was a tremendous buy zone that a lot of our lifetime members took advantage of. Okay. Right. They took advantage of a lot. Okay. So that ultimately is the case there. And there, so you could see, right. So it respected the buy zone. And then, by the way, this was March 4th, right? March 12th, I said Apple stock may look to stabilize at approximately around 210. Still more room to go. Okay. I said this March 12th. I updated it March 13. As I mentioned yesterday, Apple needs to find support, which I believe is around 210 region. Once it does, I expect the market to start stabilizing. That was March 13. Okay. Now, if you go to Apple, I said this March 12. Apple was $216. Okay. I said that we need to get around 210. It dropped at $209.68. So if you take 210, subtract 209.68, we were off by 32 cents. I said approximately, in my defense, I said approximately $210. So it dropped down to $209.68. And then it went ahead and stabilized. And it stabilized, and now we're up 5.27%. Okay. So you can ultimately see kind of where this is headed, right? So you can see, it's short and concise, to the point, to the detail, but this reflects, this is part of the research edge. This reflects me being in the market. Let me calculate. First off, how old am I? Hold on. Yeah. You just lose count, so hold on, let me just, damn, I'm old. Okay, shit, man. I'm old. Okay, so, damn. Okay, so about 14 years, 15 years I've been in the stock market. Okay, so when I kind of tell you again, this is why this is alive, right? I don't need to prep for this. I just put the tabs. I have a pretty good computer that has a RAM that can handle the tabs, and I just talk, right? Because I don't need to prep for stuff, right? In fact, one lifetime member, he was saying, "Man, I was trying to do live one time, and I realized it's a lot harder." Yeah, because again, imagine you've been doing stocks for over 10 years. I mean, it just becomes like talking about the weather, right? So with that, and again, my 14 years is different than someone's 14 years. I've broke it down to first principle. So I worked double than what a normal person works. So, I mean, you could say I have 28 years through a normal experience, but from real value of baseline reality, 14 years to 15 years. So with that, we'll be releasing this soon. There's a message me privately. I have some good news for the All Stock Trades community, because this is going to be pretty good for both lifestyle reasons. So we'll talk about that. DM me. I'm still in the process. Okay, so now as you can see from this comment, you could see the level of research. There's obviously the technical analysis that I looked at to know that. It's not like I kind of shake my head and go, and I come up with it. No, there's research, right? So it's called research edge, right? Let me see here very quickly. Just trying to get to the comments balance a little bit. if you invest in the market, you literally can't afford not to get the platform. Otherwise, buy the S&P index and forget about single companies. Exactly. Either get a Bloomberg terminal or get a bunch of subscriptions, and then try to figure it out on your own. Right? I mean, it really is tough. Just I would recommend investing in the S&P, like what Warren Buffett says. In fact, I have a video I want to show you about Warren Buffett. Just forget it. Just set it and forget it. Right? Interestingly, though, Monish was saying that the S&P 500 may return not a lot in the next 5-10 years. I don't know. I don't know if that's correct, but it kind of makes sense. Well, if someone can remind me about that to talk about Monish, it'd be really nice. He's one of our legendary investors. Follows Benjamin Graham, Warren Buffett, Charlie Munger. Sup, Al. First time catch alive in a long time. Still watch the videos on my way to work. God bless all the Clove Tards here, like myself and myself as well, right? Can't wait to hit seven dillies, baby. Dilly, right? Yeah. Wish I could buy 10 Al stock trades lifetime and resell them when the price is at 10K. I mean, honestly, I heard someone was talking about that the other day. It's like, I might as well, because that there's value here, right? So just start, buy and start selling the Al stock. I got Al stock trades, or here, right? I mean, this is why people invest in companies. Obviously, we're a private company, but this is why people invest in companies. They do their own value. Like, okay, well, I mean, you guys know a lot about this company because I keep everything transparent, right? Okay. So we went ahead and talked about these things, and we went ahead and talked about Apple. Now let's go ahead and talk about Clover. So back on March 7th, I want you to remember that, March 7th, I drew the schematic out, okay? I'm going to just zoom in this. I'm going to zoom on the schematic. So again, this was March 7th, okay? I drew the schematic, and this is Clover, okay? So when Clover first went to around $4, it dipped. It took around 9 business days approximately for it to find its bottom, okay? Once it found its bottom, it kind of pickled around to double bottomed, and then it rebounded from, peak to trough. It took about 80 days for the stock price to recover. 80 days approximately, right? So about 80 business days or 80 days to recover. And then the reason why I dropped is because expectations and whatnot. It had its earnings, and then it fell. Well, the same thing happened with Clover. It had its earnings, and then it fell. So what is 9 business days from the earnings of February 27, right? Well, if you just go to ChatGPT and say, what is 9 business days after February 27, it'll count for you. One, again, this is, leap year, whatever they call it. These are business days, right? Day 1, day 2, day 3. So ultimately, March 12 is 9 business days, right? 9 business days. So if you look at March 12 for Clover, let's look at a month. Well, let's look at 6 months. March 12 is right about here. So if you zoom in here, March 11 is $3.36. March 12 is $3.61. So you can see we were off by a day. We said the bottom will be here, but the bottom was a day earlier, which is pretty cool, right? So I hope that you can, again, when it comes to the videos, I make a lot of videos, and I put the responsibility on you all to watch these videos and kind of put the pieces together. And it's sometimes good to go back and reflect to show you how accurate our research is, right? Because I assume but sometimes people forget, and I get it, right? It's life is hard. You got kids, you got 2 jobs, I mean, some people busy, so I got couple parents that they got a kid that needs $15,000 of medications every month. I mean, so people busy, right? So I'm just going to put this together for you guys to kind of synthesize it all, right? Just so you can see what's in my mind, right? So now let's go ahead and just kind of look at this schematic, and you could see that, in that first bump for Clover, it dropped 28%, right? And then it bounced 60%, ultimately bouncing up 72%. Then it fell again. It fell 30%, and then it bounced back up to the low. Actually, you just do this, it's easier, to 60%. Okay. Then we went ahead, went here, and we dropped 30%. And now we're essentially bouncing right back up. And you can see we're making higher highs and then higher lows. So ultimately, what does this mean to you? And why is this so systematic? Why is this just following this pattern where it's, earnings, 9 business days, recovery, and then, earnings, 9 business day drop, bottom, recovery, and then we go back up. It's almost like it's a pattern, right? To a point where you say 9 business days from the earnings of February 27, which is when Q4 happened of 2024, right? And you could see March 12, and you look at March 12, and you're like, oh, literally right on the bottom, right? So one Lifetime member said, reached out, and he on the Discord, he said, I'm looking at these dark pools and I'm saying, hey man, these things are spiking, and I think the stock's about to drop, and it's yes, right? And I think these are algos, right? And it doesn't help that the market's dropping. But this is weird because usually when Clover drops, it usually drops harder than the market, which it did, but it's still outperforming the S&P on a year-to-date basis. The problem is retail investors. There's a lot of data. They just I'll give you an example, right? I have a friend who's in the market, and I was just kind of, I was like, can I just see how you trade? Can I just kind of see? Because he's saying he's not doing well. I'm like, so I'm watching him during trading hours, and I'm like, he gets his phone, and he's just like, F and this and that. And he just, just all these, just emotional. I'm just like, oh, holy moly, man. I mean, like, do you expect a professional to be, people lose their calm. Stocks go down, they just get emotional. And that's what happened. You saw smart money, dumb money, smart money buys, dumb money sells. And smart money's buying because year to date, Clover Health is outperforming the S&P, right? So now that you see this pattern, now that you see this pattern, it looks like we're about to recover. Okay. Now, on March 11th, I said, could the SPX, which is the S&P 500, bounce off of the Fibonacci? And you can see I kind of put the Fibonacci was here, and then we had that technical breakout, then breakdown, and then the Fibonacci. So the question is did it bounce? Did it bounce? So in order to find out, again, this video is about conglomerating what we said and what happened. Okay. So we look at SPX, and then we put it here, and then we could just look at the week, and we can zoom in here, so we can kind of zoom in, and we'll just kind of make this a little fatter and make it a little bigger, and we could just kind of zoom in here, and we said that it's going to bounce off of this fib. This is a fib, this is a fib, this is a fib, this is a fib, and this is a fib. And I said the S&P is going to bounce off of this fib. And then what happened? It did. And now it's above the 50-day simple moving average. Now, normally when it's above the 50-day simple moving average, it means institutions are starting to pile back on. They don't want you to know that because that's just what it is, right? You're also starting to see a divergence. MACD's going down, RSI is going up. So this is a divergence to the upside. It's bullish, okay? Right? So, again, all these things we teach in the Lifetime, because, you really got to have a You can't become a chemist without taking chemistry, right? You can't become a doctor without going to medical school. You can't expect to do well in the stock market without having some form of basics. And then you can't continue to do well in the stock market without having accurate data. Okay. So just like how, we had a dip and it basically right here on August 4th, and we dipped down to the lower fib, and then we essentially bounced right on the 50-day. And then we rallied. I think we're going to rally to new all-time highs, And then I think this is going to give Clover an opportunity. Likewise, if you don't recall, remember I said Tesla, if you don't remember in that last video, I said from a technical, let me just kind of make this like this, zoom out a little bit. I said Tesla from a technical analysis perspective, we have that triangle with a breakout, and then now Tesla's going back up, MACD signal, and the RSI is going up, right? So you can see our research, right? I don't bullshit you, right? I hate to say this, but there's a lot of people out there in the world that bullshit. I mean, it's just it sucks. I mean, this is people lie. There's people that lie even in medical school, right? There's people lie. Doctors, they just so they can get a job, right? People lie, which is it's sad. No one from the heart tells the truth. You know what I mean? There's one thing about me is I don't bullshit you, right? Because at the end of the day, I'm trying to build a legacy and I'm trying to help people, and bullshitting and lying does not achieve such mission. So I hope that me conglomerating this and just ultimately putting everything together to show you kind of the thinking and what has played out. One, it's educational because you see kind of how I do things. And maybe you might rewatch this video, kind of draw your own line, and the fact that you do that, it makes me happy. Because it's like, hey, I'm showing people how to do this. And ultimately, you'll see over the present value of time as time goes through, how these smart decisions that I've shared with you compound over time to generate life-changing wealth, right? So there's that. So we talked about the technical breakout. Let me just for a balanced discussion, let's go to the comment sections. We'll go from there. My son signed up for our stock trades. Let's go. Great for your son, Bob. I still can't afford it, but I will be. But I believe it out. Again, take your time. We're here, right? Again, no pressure at all. There's no pressure at all. It's just we created these videos to kind of conglomerate things and show you kind of the software, how it works, and ultimately now this exists, right? That's the whole point of this, right? I should probably do that. No bullshit here. Can you email me that? Because there's a lot in here that floats around. There's a lot of stuff in here, guys. Let me see. No, hold on.
No bullshit here. The next few shirts.
Let me see. Hold on. Let's see if I can, because there's a lot of stuff in my mind I have to do. So I just. All right, I put it here, but I don't know if I'm going to remember it. Just email it to me, okay? It's a good, no bullshit here. I like it, right? No, yeah. So no rush. We're here, right? The goal ultimately, guys, is at least now people know, because this is what's going to ultimately happen, because I've seen this play out a long time. So in about 5-10 years, people are going to look at Clover and they're going to be like, holy crap, you know, like this thing's, you know, in 10 years, it'll be like $50, $60. And they're going to be like, plus, right? And then, you know, probably even higher. And they're like, oh my God, who caught this? You know, who? And then they're going to be watching our videos and they're going to see that, what are they doing? What are they calculating? What is intrinsic value? And I think that I hope that gives them the light bulb moment. Like, is this real? What is intrinsic? And maybe they might type it in AI and say, what is intrinsic value? What does this mean? What, I don't know. They type it in Google. I don't know. They search for it, right? So ultimately, that's kind of the goal here. Okay. All right. So we talked about the fibs. Okay. So this is Tesla. This is like, where's Waldo? Okay. Now you tell me, when did Tesla become free cash flow positive? It's a little signal. I coded it in here. Buy, right here. Buy is a signal. Okay. So Tesla became positive free cash flow. Stock went up, then it crashed, and then it exploded. Okay. Here's AMD. This is the one that became free cash flow. It went up, it fell, then it exploded. Now here's Clover. When did Clover become free cash flow positive? Right here, the first year, fiscal year of 2024, the end of 2024, it became positive. It went up, then it crashed a little bit, and now guess what? It's going back up. And guess what? It's going to explode. So are you starting to see the pattern? We've mentioned this. I've shown you these graphs before. We've talked about these graphs many times before. Okay. Interestingly, someone posted this on our stock terminal. He said Doge could make its numbers just fixing Medicare Advantage. It's the biggest rigged market of them all. Tens of billions wasted annually through upcoding, fake risk scores, and wrongful denials. Right? Doge could 10x just by fixing that one price, piece. And interestingly, Mark Cuban reposted this, and he's actually pretty. He created a software, like a company that gives you cheap meds, right? So he's obviously interested in this. So this is going to slowly pick up steam. Ken. Well, one more thing I want to talk about in addition to this is, if you go to Chamath Polyhopatia, and I don't know if there's a photo of them in the White House. I don't know if, I don't know. Give me a moment. Maybe somebody posted about him. Maybe if we put in White House. Listen, they were in the White House. They were inside the White House, and they have the ear of the president. And that's a big deal. Okay. So here's them inside wherever this is, and there's Elon. And okay. So I think there's more to the story than meets the eyes. Now let's go ahead and now go through these bulletin points. Okay. I'm going to just read off of them since I've already put them here. Okay. So the S&P officially closed above the 20th day and the 200-day moving average, making a strong bullish technical signal. This move suggests that the market bottom may have been established on March 13, 2025. This means that March 2020, it's March 24 now. Okay, 2025. Yeah. So that means that with the index closing above 5,700, we're now positioned potentially retest all-time highs, meaning that there's greater than an 8% rally to go to for the S&P 500, making potentially Clover go up to where analysts were saying $4, $4.50, and potentially even more. Right? Maybe Craig Holland might put another price target of $6. So momentum shift. Okay. So the current technical structure points to a major market rally brewing. This is going to be a crazy rally, I think, this week. Okay. It's going to be a crazy rally, I think. Okay. The VIX dropped 9.34% today alone, indicating decreased market fear. It seems as Wall Street is kind of shrugging off these tariffs. In terms of macro, President Donald Trump stated that he may give a lot of countries breaks, right, on reciprocal tariffs, which is set to take place on April 2nd. And I told you kind of about that April 2nd date. And literally right after I made the video over the weekend, Trump said he's going to lighten the load, which is why the markets are rallying. And like I said in that video I made like a couple days ago, I recommend watching it because there's a lot of information in that. This is not, when I make a video, there's always something new. I always put something new, right? I always move forward. Okay. So with that, if you don't recall from that video, I said that in 2018, Trump 1.0, he's talked about kind of tariffs and tariff war. In January, the stock dropped about 9%, S&P. And then it rallied. And then October 2018, Jerome Powell said they're going to increase interest rates. They're going to hike. And the federal funds rate was a lot lower than what it is now. So truly, Powell is the one who crashed the market in December 2018, not Trump. I think Powell now is more dovish than he was in 2018, given that the federal funds rate is elevated. And given that the economy, a lot of people are feeling the heat. Okay. So there's that. In terms of Tesla, you can see from the past 2 days, our analysis of Tesla was proven accurate. And now we just got to see how this plays out. Okay. Very quickly. Like we said, in 2 days, the flash coupon code will expire. And we will be increasing prices to the mastering of $3,997 and to the bundle to $4,047. So take advantage. Take advantage. And then ultimately in the next 5-10 years, it will go up to $10,000 to even 15 to 20,000. Okay. This stuff is expensive, and ultimately you get access on top of everything you have. You get access to our group, which has a net worth of approximately $44.5 million, and it's growing. I think when Clover hits its intrinsic value, I think it's going to get close to $1 billion of net worth, and that's who you're going to be surrounded with. You're going to be surrounded with like-minded people, and you are who you surround yourself with. You surround yourself with losers, you will become the next loser. You surround yourself with winners, you will become a winner. Simple as that. Whoever tells you otherwise is lying. Okay. So now that we went ahead and did that, what we can do real quick is just kind of look at the quantum charts and just open this up. Again, this is our premium Al Stock Trade software, our proprietary stock terminal that I created. What I want to do is just look at SPY. This is the S&P 500, ladies and gentlemen. And we could go ahead and look at the daily, and we can add a support AI resistance lines. And you can ultimately see it bounced right on that orange support line here. And we did a rally underway. I've heard people say that, Al, just this by itself makes up all the money, part of the Al Stock Trades platform. So I'm very excited. We can go ahead and do an advanced technical analysis, and we're up bullish points of 3, bullish of 1. So overall bullish. So I'm very happy. Interesting, an hour is sideways. So that's really interesting. So I think it's transitioning. Let's go ahead and do CLOV real quick. There's CLOV. And let's just do the advanced technical analysis. And we have a bullish score of 3 and a bearish of 2. So on the minute, hour, and weekly, we're uptrending. All time, it says we're downtrending, and daily, we're downtrending. Now, I don't agree that it may seem like we're downtrending, and it does look like from this perspective. But all time, given how the stock dropped, you can ignore the downtrend of all time, and you could just focus on the weekly, daily, hour, and minute, because this was an extreme, huge increase, and then it dropped, and we're slowly recovering. So I would say we're still bullish 3 to 2, but I would honestly call it 3 to 1, right? But still bullish. We could go ahead and do a let's go back to SPY. And let's go to Monte Carlo, looking at running 25,000 simulations. This is going to slow down. It's hard to do a live, and so it's going to probably slow down the computer. But ultimately, this looks and tells me kind of where we're headed on the bull case of the S&P. So you can see the bull cases here for every time point. Yeah, it's looking pretty sexy. Again, I'm going to exit it because it is slows down the computer because it runs 25,000 simulations. We go to analyst for CLOV, $6. We're getting there. If you go to the daily, hit analyst, you can see that we're getting slowly there. Okay. We can go ahead and look at the minute. We can do Monte Carlo here. We could see bull case for the minute, 388. Base case, 380. Bear case, 373. Hour, bull case, 455. Base case, 386. I wouldn't call the bear case anything, but you could see 324. When you get to the higher parts, the bear case is heavily weighted given what it can see from the past. But I was just kind of focused on the bull and base. The daily, we got a base case of 418, a bull case of $7.33, which is a 92% upside. Weekly, you got a base case of $9.22, which is 442% upside. And the bull case is $6. The all-time is bull case is $6.49. Weekly is the $9.22. Now, what I want to say real quickly. Let me just go to the minute here. What I want to say is, if you go to the cover calls, you can ultimately see that it goes up to $8.05 and then $9. So you can see that our platform ultimately gives you the likelihood predictions, almost like these things are run on Monte Carlo simulations, which is kind of interesting, right? No other platform can do this, just ours, right? It's pretty powerful, and it gives you the probabilities, which is pretty damn good. Now, interestingly, if we investigate more, we can look at analyst estimates. And you can look at the estimated revenue on the high side, and you could see in 2029, they're expecting $3 billion in revenue. And I think this is going to increase more, but you can see revenue is going to be popping. And you can see a cross section between what's expected and what's popping. So I would say it's the revenue is slowly going to be tracking towards this way, but it's going to go back up to what it was at 3.4 billion back in 2022. But this type of revenue growth is going to be profitable. It's not going to be cash burning. The question now is ultimately how much of that is going to turn into free cash flow. You could go ahead and most importantly go to net income. And you could see that before this was positive and now it's negative. So it'll be interesting to see how accurate this is. as analysts get more information. I think they were pricing in counterpart assistant, which they may have removed. But ultimately, you can see the profitability that they're going to predict now is 2028. I think it's going to either occur in 2026 or 2027. My prediction is 2027, but we'll see. Peter did say 2026, but we don't know if he put his foot in his mouth. Okay. So there's that. If you look at institutional ownership for Clover, we're still waiting for the next update. If you score it, we have a bullish of 6 and a bearish score of 3. This is very beautiful. We have a lot of money being invested now. We've crossed the threshold. And we're looking pretty damn good, guys. Okay. Now, if we were to exit this and maneuver to the price target software, which is our intrinsic value or proprietary intrinsic value, we go ahead and put in Clover. And let's say, for example, let's assume Clover is going to grow 37% from here on out, given the disruption. By doing that, and let's say we could keep it at 58. Right now they're at 30. Technically, it's supposed to be 80. So we'll just be bearish and call it 50. And we'll go 37%. This is not including SaaS. You run the intrinsic value from our software, and you get a bull case of $15, which is a 298% upside, with a base case of $10.20, a bear case of $7.32, and a recession case of $3.04. Now, being humble and making the growth rate humble, we can, again, I love how kind of highlights it green. I want to apply that to the progression analysis. It's really sexy. See how it highlights it green? It's a nice little programming trick. So nice little cuteness here, right? Well, I like it. Nerd. But yeah. We can go ahead and do 20%. Does that sound fair? We go ahead and do that. We get a bull case of $4.61, a base case of $3.23. But remember, we're humble. We're making the growth rate humble, but you're telling me that the free cash flow is going to be 50? No, I don't think so. I think, especially with counterpart and all these other things, I think potentially we're going to get to we can get to the original discounted 47 million of ACO. Let's do 80. I think 80 is fair. Or if you really want, we already know that the growth rate, let's say the revenue, if we take the free cash flow divided by the revenue, you get about 5.9%. We could say that 1.8 billion, 5.9%. So let's do 80 for now, and then if we update that, you get a bull case of 737, which goes back to our Boeing 747, the base of 517, bear at 387, and recession of 203. Now, quite interestingly, though, if you were to take and look at, let's say, the calculator, all part of access to the software, you can also, it has like a large language model style, so you can say 13.5 at 5%, and it's able to calculate it for you. So let's do that. Let's say, let's say
1,350 M at 5%.
let's just shift that to an 8, and let's run it. We run it, we get 92. Well, actually, I'm wrong. Let's actually do 5.9%. 5.9. If we run that, we get 109.
109.15 meters.
Okay. So we do that 109 and we run it. And that's using a humble growth rate of 20%. Now we know that Alignment Healthcare is growing, and now Alignment is Steph 1746, and it's up 51%. And we know, I think it's going to be prognostic to what's to come. It's Alignment's growing 50.68%. We already, I think, made a video about the intrinsic value of Alignment, how it's just strategically put in terms of its free cash flow, and especially its dominating revenue growth. It's growing 50%, and it has more members than Clover. So I would say Clover can grow 37%. But if we just kind of humbleize the growth rate and do 5.9% of 2024's growth rate and do 20, and if we run that, we get a bull case of 10, a base case of 7. Now, if we say that, because remember, alignment is growing 50% plus, if we just say that Clover can maintain 37%, which is obviously, is it possible? And we know that free cash flow positive just happened for Clover right here. You can see the free cash flow positive. I would say 37% is doable, given that alignment is 50% plus. If we update this using the free cash flow of 5.9%, which removes the discontinued operational cash flow, and then you still, we're essentially removing the 47 million around to give us the whole cash flow. I think the reason why the 47 million existed is because of ACO. They're pushing out ACO. Now we could have more expenses that will be discontinued, but I think they're just cleaning up the balance sheet. So with that, I would say if you run 37% at 109.15 million of free cash flow, you get a bull case of $33.11, which is a 769% increase from the current price of $3.81, which is a 7-bagger on top of the already 6-bagger that we have. We have a base case of $22.26, a bear case of $15.98, a recession of $7.41, showing you that this stock is extremely undervalued. Now, this goes back to a couple things. One is it goes back to Vivek's and Andrew Toy's compensation. If it goes over $25 or something for 90 days, they make money, and then obviously we make money, right? This obviously bull case of $33.11 and base case of $22.26 and a bear case of $15.98 does not include counterpart assistant, which is insane. If we really want to be somewhat decently accurate, right? Let's calculate the intrinsic value of Alignment Healthcare. I think that would be helpful, right? What do you think, right? So let's just do that right now. So to do that, they're almost free cash flow positive. To do that, let's just open up this and then open up the financial data and analytics metrics chart. Full screen. Let's open up Alignment Healthcare, load it. Let's look at the free cash flow. And there's the free cash flow. Let's look at the revenue. Just look at the quarterly for a sec. Okay. So that's fine. Okay. So what we can do now is we could do 5% of 2703. So we'll open up a new version of this and we'll type in Alignment Healthcare. We'll pre-fill the information in. And by doing it automatically, you get a bull case of $39, a base case of 26, a bear case of 19. But it's not, I don't agree just yet. So let's use these numbers. So 2703.56. Let's use this number here. Let's just do 2703.
1,350 and 5%.
And let's do 5.9. Well, let's do 5%. Well, let's do 5.9% to make it respectful. And then we said 2703, 2703, whatever it is. Was it 23? Hold on. It's 2703.56. We should round up, but we'll just say 2703. That's fair. No? Okay. We run it, we get 158.948 million.
159.48 years.
Now, the funny part is I think Clover's a better buy because we're making less revenue and we have free cash flow, meaning we're more profitable than Alignment. But I'm just trying to see how the market is evaluating Alignment. So right now, Alignment is growing 50.68%. So if we just kind of see how it's growing right now, we get this stock price. So obviously it's not growing that much, right? To reflecting to what it is. But let's see what analysts are expecting it to grow. We could go to our quantum chart to kind of see the growth rate of what analysts are expecting it to grow to by. If we do analysis, so I'm curious to see. So analysts are expecting 38.69. So I mean, they keep whipping them out of the ballpark here, but analysts are saying around 25%. So if we put 25% growth rate here, we get a bull case of 56, a base case of 38, a bear case of 28.55, and a recession of 14.37. So I would say Alignment based off of this, it's trading anywhere between the recession and bear. So it still has room to go up. Given that it's trading between recession and bear, let's go ahead and do a humble growth rate for Clover with this analysis. And I would say a humble growth rate of Clover. We'll say 20%. So now let's just go ahead and say 20%. Keep the free cash flow the same. Let's see what it goes to. A bull case of 10, a base case of 7, and a bear case of $5.29 and $2.78. Now we did say that Alignment is trading anywhere between its bear case to its recession case to its bear case. Clover trading again next to its recession to its bear case. So you can see ultimately by doing this analysis, what I'm trying to do is I'm trying to compare apples to apples here, right? So the market right now is pricing in these small caps near the recession and bear case. And the fact that Alignment is getting slowly closer to its bear case shows me that Clover is about to follow pursuit to get near its bear case as well. Okay. So I think that's what's happening right now. Okay. So we're on the right move. I would say, you can't say 37% for the next 4, 5, 10 years. It's tough. They have to continuously grow that. But, I think that Clover could grow more, given it's much smaller and it's more profitable and more fiscally responsive than I would say Alignment Healthcare is. Because it's, Clover's free cash flow positive. Alignment Healthcare is not. So I would say based off of this, I would potentially see Alignment. We could potentially see them at either 28 to 38. And we could see potentially Clover from 5 to 7 this year. If, for example, that they start saying that we keep getting more growth than what we have, then this might actually increase and continuously be 37. It depends. It's tough. But if it does and it continues to grow 37, then we're looking at 22 to 33. Now, if they go humble and they go 25% like Alignment, let's say, then we're looking at these types of prices. And again, this is without SaaS. Remember, this is without SaaS. So I think this is kind of where we're at. So ultimately, the big one, and this is where we're going to do our magic, the big one is in May. So really in a month and a half, right? Less than that. less than a month and a half, we're going to see the revenue growth of Clover. Then we're going to see the free cash flow of what it generates. And that's going to be big. And we're going to see discontinued free cash flow. And that oh my God, guys, that is going to give us a lot of information. And then that right there is really going to give me a lot of data, and potentially they may release a big partnership. Who knows? But let me just kind of give you like just talk here, mono to a mono. Okay. So let's just assume Clover goes to 33. And let's say someone has 200,000 shares, right? 300,000 for it. Let's just say 200,000. That's about $6.6 million. Okay. We're going to do a couple calculations. We're going to first do the 1.70%, 1.7%. And that's monthly options. So that's about this much money per month. We can do the average, round the average, which is 219,000 per month. And then during earnings, which is quite crazy, we can see up to 15, 16%, but we'll say 10%. That's about $660,000 per month. I would say we could take the average of these two, but we'll just say kind of this. And this is kind of your, we'll say your your star month. Right? So imagine making 100 and just imagine making $112,000 to $219,000 per month. Imagine making that, right? It goes back to what we're talking about. You make this money, you buy houses cash. Housing prices are falling now, especially in Arizona, Texas, and other places. You buy those houses cash because you don't want to get a big mortgage. You rent out those houses, so you make whatever cash, 6-8% per year. Your argument would be like, well, Al, why don't I just add more to the pot of covered call? You're probably asking, how am I making this money? It's covered calls, right? Covered calls and cash secured puts. You're pretty much doing the wheel strategy, right? And then that's another thing that we have in our platform. Okay. Then you make this money per month, right? And then after, let's say, every 2 to 3 months, you buy a property, or you can buy condos every month. So then you start building your real estate empire. Okay. You build your real estate empire after 5, 10 years, 15 years, whatever. A recession happens. Everyone freaks out. Stocks go down. Uh-oh. It's hard to, that's it. Stocks are going down. What do you do? Oh my God. You have a bunch of properties. You're protected. Okay. You go to the bank and you say, and you have to make sure the tenants have good credit scores and good jobs. Again, there's a lot of work with properties. This is a tough game. This is not easy. Okay. It's not like let's buy a property, right? This is a job. Okay. Like anything in life, there's nothing that comes easy. Wish if it was, everyone would do it. Right. So recession happens, stocks fall by 50%. It's freaking crazy. It's a lunatic. Singular stocks fall by 90%. It's time to buy. But you don't have any gunpowder. What do? We got a bunch of these properties. So you go to the bank and you got to move quickly. it's been maybe 10, 15 years. Your properties probably accrue 2% per year. So you could pull more money out because they've gone more expensive because, right? Inflation, right? Houses go up and adjust to inflation. You go in and you get a big fat mortgage. Problem is now you have a mortgage to pay. Who's going to pay it? Not you, your tenants. And you could be defensive, right? You could maybe do 50% of your properties or 70% or 60, right? Exactly, right? There it is. HELOC it all. HELOC that crap, right? So you take the money out. It won't be like, it'll probably be 60, 70% of the property's value. They're not going to, right? Just speaking from my own experience, right? You take money out. Now you have, let's say, let's just, we're doing this example. Let's say you buy houses that are around 400,000. So every 2 months you buy a house, right? So 12 months divided by 12. Yeah. So every year you buy 6 houses. So let's say 12 years go by, you have 72 homes. 72 homes priced at $400,000. You have about $28.8 million in homes. Okay. That's your net worth in terms of the homes. Remember, you bought these cash. Okay. Using the wheel strategy. Okay. It's over 12 years. You go in and you pull equity out, and let's say you pull 75%. You pull 21 million out. Okay. So now you have $21.6 million of buying power. Okay. You see how you're using it to preserve cash. And that's not even including all the money that you got from your tenants over the past 12 years. You see how you're consistently making money in your sleep? That's how you win in America. Okay. All right. HELOC is usually better to get a fixed rate. Exactly. But also usually stocks, when stocks go down, I forgot to mention this. When stocks go down, what happens to interest rates? They go down next to zero, right? So your interest rate will be a lot cheaper, right? So then you have your 21, and when this happens, ladies and gentlemen, we're going to have our group of people, right? And we're going to sit down, and this time I'll be active in the group. I'm always active, but when I say I'll be active is we'll open up the internal Discord video. We're going to come together in the video chat, and we're going to come together, and we're going to talk like businessmen. We're going to sit down like businessmen. We're going to have a conversation. We're going to say, what do we do? The market's dropping. What are the facts? What's happening? What's the damage? And then we're going to have a group of multimillionaires coming together. It's going to be pretty cool, right? Okay. So here it is. Can't we use some examples that are down to earth for a lot of us here, like myself? Well, I mean, you just have to play with the math. So maybe in 2 months, someone 200,000 gets because we have people that have 3 million shares, right? You just mess with the numbers to be a little lower. Maybe it might take you a year to buy a property, right? Instead of every 2 months, right? If you have 50 divide by, yeah, there it is. If you have 50,000 shares, divide by 4, right? So I'm just kind of giving you the average. Because like, for example, B-Rob, and he's publicly shown this, so he's comfortable. B-Rob has 240 or 250,000 shares, right? So this number for him, this is undervaluing him, right? You see? Yeah. Right. So I get it, Marty. I'm sorry, but it's just kind of give you, I'm just, just speaking, just kind of what I'm thinking, right? But from this example, just again, divide by 4, right? So instead of 21 million, you'll have like 5 million, right? Fair. So now you have $21.6 million. Stocks have dropped 50 to 90%. The question is, what stocks do you buy? This goes back to intrinsic value. This is where you have to say, what is the business doing? Is the business being affected? Is the business still making money? It is. So it's just a scare. So you buy. So if the stocks, let's say, let's do an example now. Let's do an example. Let's look at Meta. Meta stock is a safe stock, right? 2020, it fell from 220 down to 54. Or better yet, let's just do this. This is a bear market. It's not even a recession. I mean, this thing fell even more, 69%. I think 30%. Let's, let me show you stocks that really fell. Oh, baby, that looks sexy. Okay, ready? Okay. Damn, it's hard to see. You have to do max. 50 down. Okay. ERI, El Dorado Casino, merged with Caesars. Okay. The stock literally went from 68 down to 10. Then it went ahead and went up 10x. So if you 10x 21 million, you have, 210 million dollars, right? So maybe that's a little extreme. Let's just say let's look at Tesla. Let's look at Tesla. So here's Tesla. Again, it's tough because this is on its transition. But let's look at a stock that has been, it's tough because it exploded. Here, let's go back to our original. Let's go to Meta, and let's go to Meta's easy. So forget Meta being $600. Even though we made a video 2-3 years ago saying Meta is going to be $500 to $600. We made that 5 years. We made that video 3-4 years ago, and we were right. It's all on YouTube. You can search it. All right. So let's just kind of use this example. Oh, that was my first 10x. El Dorado. Hey, look at you. That's what I'm talking about. See, this is what I'm saying. Here's what I'm saying, Rafiki. Just wait until we get the next recession. We're going to be dancing. We're going to be having a great time. Right. And but by then the lifetime access will be 10, 15K. I mean, 20, right? First stock I bought in the market, and now I'm with Al. There it is. Look at you. Usually smart. Hey, smart people think alike. There it is. Excellent. Oh, hell yeah, dude. Hell yeah. That's what I'm talking about. Man, people were panicking. Americans like to gamble. They ain't going anywhere. Get out of here, right? All right. Bill Ackman. Oh, he was shorting the market. All right. So let's go here. Okay. So, and this was a self-reduced, like this recession. The thing is, the markets came in and protected it on the downside. Really, though, this drop is a lot worse, 70%. Let's just call it a 30% drop. And it went up to recover 52%. So pretty much, we could call it that. But really, though, we're probably going to pick stocks that are a lot more, because we're not going to do Meta. Like, we're going to end up diversifying stocks that have dropped. So we can probably get maybe anywhere between a 2 to 5x. So let's be humble and let's say 3x. So just multiply this by 3. Now you have $64.8 million. Okay, that's pretty much what's going to happen. Okay, moral of the story: invest in assets, borrow against them to buy more, use other people's money to pay the loans off. Pretty much, Cappy. I mean, that's pretty much it, right? I kind of I was just trying to use an example in the real world so you guys can see, but that's pretty much the moral of the story. I feel like me going slow, it might help because people learn differently. I can say that. People can be like, what the hell does that mean? Because they don't teach this stuff, Cappy. They don't. People don't know this. I mean, you say this, I guarantee you, go tell this somebody, go tell to 10 people outside and where you live. They're like, what is that? How do I borrow money against something? It's tough, my friend. I'm trying to be slow, but kind of cut myself in a rabbit hole because Jerome Powell stepped in, but other stocks dropped like El Dorado. And then that was 1,000x. So I'm sorry. That was 10x. I'm not 10xing 21 million. I'm just going to 3x this. That's 64 million. So now you have 64 million, right? So you have $64.8 million, right? Plus the original portfolio, which was which was a 6.66 million.
0000099.
Okay, you go ahead and add this now to 660000. Now you have 71.4 million. But remember, you also have $28 million of properties. You see how now you're going up to $100 million. And that's why it's important to be healthy so you can live long to compound your wealth, because you have to be smart. Okay. So then you have 71.4 million. Okay. So now you have this. Okay. 71.4 million. And what do you do with it? You know, some people are going to say, well, okay, well, you could just go buy back the HELOC so you don't have a mortgage. No. Why would you do that? It's low interest rates. Let the bank hold the bag. Let them hold it. Screw you, bank. Hold the bag and have your tenants pay it. So what do you do now? You do the same thing again with $71.4 million. You go ahead and hit it with a 1.7 to make 1.2 million a year, or
71,400,000.
you hit it with a 0.0333. Well, let's add another 3 to this. And now you have 2.3. So you make anywhere between like 1 to 2.3 million a month, per month. 1 to 2.3 million per month. And guess what you do now? So let's say it's all together you make, I don't know, 1.75 million. Right? You make
1,750,000.
You make that every month, right? On average, right? You make that every month. And then now you buy properties that are around 400,000, let's say. You buy 4.3 properties. Let's call it 4 properties. 4 properties times 12, you get 48 properties every year. You multiply that by the next recession of 12 years, you have 576 properties. Then you add the already properties that you bought from before, which I don't know what we said. We said what, 6 properties? 6 properties multiplied by 12. We said we're going to have about 72 properties. So you add your 72 properties. Then you go ahead and take 648 properties multiplied by 400,000. Then you have, your net worth now is $259 million in properties, right? So here it is. Al is teaching the most important parts people do not know. The multiple money-making vehicles vary. Al teaches the all right here. Thank you. Thank you. So again, right? Al, can you do a payment plan against what? So Toya, you can. It depends on your credit, but also we have a firm for the United States and Canadian people. I think England too. And a firm can do 36-month payments, right? Or people do credit card. I don't like to advertise. I personally don't like that. But the way the covered call strategy works, you'll be actually making more money than the whatever interest rates are charging you. And you could see what we're teaching is worth a lot. Now, let me go back to the thinking here, okay? Okay. You have all been lied to, okay? Your whole lives, you've been lied to, okay? You've been told you work hard, you'll get somewhere, okay? You've been told that if you come early and leave late, you'll get somewhere. All it's going to get you is just a little maybe extra raise, but it's just, you're just going to be a cogwheel in capitalism to make money for people like us. People like us, you're making money for us. The question that you have to ask yourself is, do you want to be an investor or do you want to be the one rowing the boat? They lied to you, dude. They lied to you. Okay? Here you are working all these hours. You don't even see your kids grow up. You don't even see your dogs grow up. And then you're trying to work for that retirement. And by the time you get there, you don't even know if you're going to be alive. What a gamble. Now that's a gamble, right? What I'm trying to teach you is how to break. I'm not saying break out of the matrix. I'm saying become a Hulk and freaking tear out of the matrix. I want you to tear the shit out of the matrix. That's what I want you to do. I want you to break out of it so you can join our platform, so you can join our because we're going to be going to Miami. We're going to have our nice boats. We're going to go to California. We're going to go to different parts, maybe Traverse City, Michigan, Italy. We're going to have a great time. Okay? Right? It's here. They had to lie to us because they need us to make them rich. Right? It is the truth. The biggest thing here, Al is teaching an important part people do not know. The multiple money-making vehicles vary. Al's teaching is all right. And this is what people do. Why do you think Berkshire Hathaway has a freaking hold on, let me show you. Okay. Just watch. Okay. Berkshire Hathaway. Okay. This is a Warren Buffett company. Okay. This is a company in Omaha for stocks. Okay. So if Warren Buffett was all about stocks, then why the hell does he have real estate? Why does he have Berkshire Hathaway home services? You ever ask yourself that? This is what the rich do. It's crazy. This is what they do. Now, when I'm telling you in terms of having all these homes, you're going to have to build a team. Whew, that's going to be a lot of people. You're going to have to hire employees. You're going to have to, your properties may not be in all-in-one state. You have to take flights. First class, of course. You might even charter a private jet. Who knows? Again, if you're worth a lot of money like this, that's it. You're a businessman. Your time is everything. You don't got time to bullshit. You don't have time to dilly-dally. Okay? The point that I'm trying to tell you is if it's true that Clover, and you could do this with Clover at $3 million. You could do this with Clover at $30, right? You see how you can build this? It's crazy, right? Right? All right. Al, question. Runoff expense for ACO excluded. It looks like Q4 would have been profitable. Okay, good. It feels like leadership is being very conservative about guidance. Maybe, maybe. And if that's the case, then we may get closer to what I was talking about this video than what, right? You may even fly your own jet. B-Rob, I'm not you. I'm afraid of heights. Oh God, I'm afraid of heights. Shout out to the Thunderbirds. Love you guys, right? ACO is done, which means that the free cash flow will probably go back to 80. We'll see. And if it does, holy crap. Holy crap. Q1 will be all telling. Okay. Again, as I said, the more quarters we get and the more data I get, I remember, let me go back because it's, sometimes it's hard. Let me go back to tell you. Okay. Let's go. Okay. This is called market sentiment intelligence. Okay. This is very expensive. Okay. You go ahead and type in Palantir. Okay. And you go and do run analysis. Smart money is in blue. Dumb money is in red. Smart money turned bullish in Q2 of 2023. The stock price ran from around 10-ish to 15-ish all the way up to over $100. All right. And it took 6 quarters. 1, 2, 3, 4, 5, 6. 6 quarters. Are you curious to see how Clover looks like? Let's scan it. Here's Clover. Run the analysis. Here's where it turned bullish. 1 quarter. It's already starting to grow up. Okay. Imagine what is it going to look like in 6 quarters? It's going to, I think, do a Palantir. It's going to explode. Okay. This shows you what smart money, Wall Street is doing, and what dumb money, right? So it is game time. Okay. So what I'm trying, listen, okay. I got sick and tired of the rich getting richer. Okay. This whole branch of where, listen, you go to the top of any of your field, you're going to find nepotism. You're going to find, it's just, the world's not fair. Okay. I tell you something right now, and you're going to go crazy about this. Okay. Wall Street is more fair than your workplace. You'll be like, what? If you follow what we're teaching here, looking at actual numbers, looking at free cash flow, looking at these investments, I'm telling you, Wall Street is more fair than the job you're working at. Wall Street is more fair than where I'm. Okay, correct me if I'm wrong, right? Right? Talk to me in 5-10 years from now, right? And you tell me. To all my lifetime access members, is that a right statement to say? If you know what you're doing, then you've won. What I'm trying to teach you here is how to break out of the matrix. Now, again, listen, is life all about money? Of course not. Steve Jobs, said it. No amount of money was going to save you if you have, God forbid, right? What he had, right? So, but what it will do is it'll allow you to enjoy the world. Imagine going to Miami. Let me show you something. Okay. Imagine going to Miami, right? Imagine going to Miami and pulling up your screens, getting your internet connection going, connecting your screens and looking at the abyss of the beauty of life. This is what I want to share with all of you. This is what I want you to see. Right? And now other people, which, screw them, they suck. They want to take this away from you. They don't want to show you this. Work in silence, right? Work in silence, right? No, I work loud because I want other people to see this too. I want you to be there with me. I want you to be on the next room next to me so we can go have fun. So we can go hit Miami hard. Shout out to Rabdo, right? We can go drink our sangrias. Okay. That's the life that I want to live. Right. And anything good from the heart is God's proof sent beforehand to indicate that it's yours already. And we're going to get it. We are all going to get it. Okay. We just got to follow Benjamin Graham's ideology. Right. A stock's worth is the present sum of all of its free cash flow. And that's what we're doing. Okay. So net worth is just one piece of the puzzle that helps it all go together a little easier. Exactly. It's almost like the glue. Just imagine seeing this again. This is we're going to have a good time, guys. I'm going to take you to what the mountaintop should look like. All right. I'm going to take you to what the mountaintop should look like. Okay. Because I think I've seen it. Okay. God bless you all. Very quickly. We are the flash coupon code expires in 2 days. Take advantage because we will be increasing prices. That's it. Okay. God bless you all. And that's it. Have some fun. I'll see you on the next one. We'll see what this crazy rally of this week is going to behold. And ladies and gentlemen, this is it.